This is Nightly Business Report with Sue Herrera and Bill Griffin.
Dow powers higher. The blue chip average logged its 15th record close of the year, but not every part of the market is red hot.
Auto-packed, Honda and General Motors team up to create a new generation of driverless cars instead of going it alone.
Hack attack. Layers of security are meant to provide extra protection when you log on, but a former hacker says that's not the case. Those stories and more tonight on Nightly Business Report for Wednesday, October 3rd.
And good evening, everyone, and welcome. The Dow Jones Industrial Average pushed further into record territory. Investors cheered a solid economy and rising optimism. Not only did stocks rise, but bond yields did as well. The yield on the 10-year Treasury is now at a 7-year high, and that helped lift the financial sector. The Dow Jones Industrial Average rose 54 points to 26,828. The Nasdaq climbed 25, and the S&P 500 tacked on 2. But even with the Dow at a record, not everything is rising along with it. Mike Santoli tells us what's working for investors and what's not.
Judging by the headline indexes, the stock market is running hot. The Dow Jones Industrial Average and S&P 500 are up about 9% so far this year. Yet below the surface, big sections of the market have cooled off quite a bit. Shares of smaller companies, as measured by the Russell 2000 index, are down about 4% this month, a period when the S&P has gained better than 1%. And bank stocks, long seen as a bellwether for the economy and broader market, have been stubbornly weak. The sector is off by nearly 4% the past month and is down slightly for the year, even after a rally on Wednesday. Finally, some strategists are noting that the number of stocks making new 52-week lows has often been exceeding those hitting fresh highs lately, even on days when the main indexes are positive. This pattern is clear, but what it means is open to question. Traditional Wall Street wisdom holds that the broader a rally, the stronger and more lasting it should be. But small stocks have lagged the S&P for long stretches of time in this and other bull markets without the entire market hitting a rough patch. And while bank stocks probably can't continue declining without hurting the overall market, there's no requirement that they need to lead the way. Some are arguing that the mixed performance is about the waning of trade war fears lately. Lesser worry over trade frictions has allowed big multinationals to gain at the expense of smaller domestic companies in recent weeks. Whatever the root cause, this behavior is pretty typical of a market in the later phase of an economic cycle, as investors emphasize those companies that can sustain growth for years to come. All in all, investors are becoming more selective without fleeing stocks entirely. That's not necessarily a trend to worry about, at least not yet. For Nightly Business Report, I'm Mike Santoli.
By the way, that positive economic news that Sue alluded to came from the rip-roaring labor market. The private payroll company ADP said this morning that employers added 230,000 more positions in September. That was well ahead of expectations. Job gains were spread across industries, with the services sector leading the way, and this big increase came despite disruptions that were expected from Hurricane Florence. On Friday, of course, the government will issue its own monthly employment report.
The U.S. economy is set to look good, quote, for some time. That is the outlook from the president of the Chicago Fed, who expressed optimism over the job market and inflation.
Fundamentals are very strong. The labor market is doing terrific. Unemployment is below 4%, which is really something. Payroll employment has been over 200,000 per month for many months, which is really a good showing. And inflation is up to 2%. I spent quite a long time indicating that I think inflation needs to get up to 2%. And here we are.
And while Mr. Evans is comfortable with another rate hike this year, the head of the Philadelphia Fed said he'd like the central bank to take its time raising rates, citing tame inflation.
Seems like nothing can stop oil prices from moving higher these days. The government today reported the largest weekly build in domestic crude inventories in more than a year. But even that seemingly bearish news failed to push the price of crude lower. It settled above $76 a barrel today, another 4-year high. But yet there are questions about whether the upward climb can continue. Jeff Cutmore is in Moscow for us tonight at the Russian Energy Week conference.
The hot speculation here at this Russian Energy Week event is whether Saudi Arabia and Russia already have a tacit agreement to increase output. Inevitably, if sanctions are imposed on Iran by the US president in November, as much as 1 million barrels a day of oil could come off the market, possibly even more. So the question that has been driving oil prices higher, how would that gap in output be filled? There's also the question of who is to blame for prices at a 4-year high. President Trump says it is OPEC ripping off the world, whilst the Qatari energy minister says no, OPEC is not responsible.
OPEC is trying not to manipulate the price. It's trying to bring the market to balance.
For the time being, the Russians and OPEC are playing their cards very close to their chest. But nobody wants to see oil at $100 a barrel, not even them. Whilst they may make more profit in the short term, it will inevitably lead to demand destruction over the longer term. This is Jeff Cutmore in Moscow for Nightly Business Report.
And with oil prices at these levels, what does that mean for the energy stocks? Matt Maley joins us now with some answers. He is an equity strategist at Miller Tabak. Good to see you, Matt. Welcome back to the program. You think it is time, a good time anyway, to move into the energy stocks? Obviously, prices have been high, but what else are you looking at?
Well, I think the key is that the energy stocks, not only are they high, I think they will stay high. Now, they may have to, crude oil's had a nice little run here, so it may take a little bit of a breather and pull back slightly. But I think that's just going to create an opportunity. And the reason why I think oil will stay up is twofold. Number one, you have, everybody's talking about OPEC, and President Trump is saying OPEC has got to pick up production. The problem is they haven't updated their production facilities, their capabilities over the last decade like the United States has. So even if they wanted to, they can't pick up the production the way they used to in the past. So I just don't think that's going to be a big issue. On the technical side of things, of course, we have the oil is broken out of its sideways range that had been in a long time, and the commodities traders are the ones who invented technical analysis, so that's very bullish too. So you have both a fundamental and technical reason to like it.
When you're talking about the stocks you might want to invest in, you will think of the giants, the Exxon Mobils, the Chevrons, and so forth. But you're looking at the smaller companies for maybe a better leverage as the market goes higher. Why? And who are you thinking of?
Well, as you mentioned, the big cap names like Exxon and Chevron, they're good names because they pay you to wait. They pay a real nice dividend, and they're also highly weighted in the ETFs. But I like some of the other names because with oil breaking out here, it really took off once it broke out of that range. And we're seeing a couple of stocks like Apache Oil, Marathon Oil, and the old Enron Oil and Gas, the EOG Corp. Those stocks are right at their 2018 highs. So if they can break out a little bit further, that's going to give the same kind of momentum we've seen in the underlying commodity. I mean, crude oil has been the energy stocks have been lagging crude oil by quite a bit. So if they can break out of these areas, it's going to attract a lot of momentum, and I think be quite positive for the entire sector.
One of the things we've seen so far this year in energy is volatility. So what might derail the upward trajectory of oil prices and then obviously the stocks?
Well, I mean, you could always have, I guess the biggest thing, of course, would be if we had some softening in the situation with Iran. If they can come back on with their production, that's going to be a significant impact to the price of oil. But, the one thing I really like about this situation is that these energy stocks did exactly what they did last summer when they lagged behind the price of the commodity, the price of crude oil. And then a couple of weeks later, they really rallied. And I think that's what we're about to see in the coming months.
Quickly, Matt,
weeks and months.
Before we let you go, I mean, I assume you're not throwing darts at all the energy stocks here. Who might be the laggards in this category right now?
Well, you get some of the ones that are, like you said, it's a momentum play and a confidence. If you don't have the confidence in them, and some of these stocks are already rallying, like the ones I've mentioned, but they haven't really broken out yet. But you have stocks like Neighbors, McDermott, and Weatherford International. They've been in a downward sloping trend, and it's kind of been dead money. So those are the ones, I don't necessarily say sell them or bearish on them, but I just don't think they have the upside potential that the other ones I mentioned have.
All right, Matt, thanks so much. Matt Maley with Miller Tabak.
Time to take a look now at some of today's upgrades and downgrades. And we begin tonight with Nike, which was downgraded to hold from buy at HSBC. The analysts there cited the stock's valuation following that huge 60% run-up over the past year. Price target now $92. Shares of Nike fell a fraction today to $82.50. Oracle was downgraded to inline from outperform at Evercore ISI. The analyst says that a lack of any catalysts will keep that stock from pushing any higher. Price target now $53. The stock fell about 1% today to $49.75.
Michael Kors was upgraded to buy from neutral over at Citi. The analyst cites steady earnings and its recent acquisition of Versace. The price target is $79. Shares rose 3% to $68.08. And Tempur Sealy was upgraded to neutral from sell at UBS. The analyst says the company could benefit from a potential mattress firm bankruptcy. The price target is $56. The stock rose more than 10% to $53.66.
Still ahead, the road ahead. How long before highways are full of self-driving cars? The National Retail Federation is forecasting a jolly holiday season for retailers. The industry trade group today said that it expects sales to increase about 4.5% compared to last year to a total of $720 billion. That figure, by the way, excludes cars, gas, and spending at restaurants.
Senator Bernie Sanders wants to break up large financial companies. He says their size exposes the economy to too much risk. The Vermont Independent introduced a bill that would require any financial company that has a total exposure of greater than 3% of gross domestic product to split up. That would include JP Morgan, Goldman Sachs, and Berkshire Hathaway, among others.
Yesterday, remember we told you Amazon surprised everybody by raising the minimum wage it pays workers to $15 an hour. Well, last night, CEO Jeff Bezos explained why.
Thinking about this and trying to decide, do we want to change? We realized we just made a decision. Well, you can offer competitive competition or you can decide to lead. And as soon as we framed it that way, we're like, let's decide to lead.
It's a great
and I think people will follow.
Mr. Bezos made those comments after receiving the Spirit of Service Award organized by the Partnership for Public Service, which honors people who make a difference through their work.
General Motors and Honda are teaming up to build a new car, but not just any car. This one will be self-driving and sold around the world. The reaction was mixed. Shares of GM rose while Honda's stock fell. Phil LeBeau tells us why these two auto giants are doing it together instead of on their own.
General Motors, the world's second largest automaker, is joining forces with Honda, Japan's second largest automaker. Technically, Honda is investing just under $3 billion and taking a small stake in GM's subsidiary, Cruise. Together, the automakers will develop and build an autonomous vehicle. This is a partial image of what that vehicle might look like when it's finally sold around the world at some point in the future.
And what we're doing is designing a purpose-built vehicle that's fully autonomous, that can be deployed in a shared network for the transportation of passengers, transportation of other things. And so we see a huge amount of opportunity and flexibility coming out of this.
With practically every automaker and many tech firms working on self-driving cars, why did Honda approach GM about making a deal? It's mainly because Cruise and its development of self-driving cars is viewed in the auto and tech industries as being at the forefront of putting autonomous vehicles on the road. Waymo's fleet has logged more miles and will be available for the public to use later this year. But Cruise is not far behind. GM plans commercial service of self-driving Cruise cars by the end of 2019.
We will deploy when we're delivering the level of safety that we think is necessary to have this technology deployed in a driverless environment on the road. And as soon as we're ready to do that, we'll be doing it.
The race to develop self-driving vehicles is just starting, but it will really heat up over the next 3 to 5 years when robo-taxis, autonomous drive delivery vans, and self-driving cars become a much more common sight. Phil LeBeau, Nightly Business Report, Chicago.
And Rebecca Lindland joins us right now to talk more about these ongoing developments in the efforts to develop these self-driving cars. She's the executive analyst at Kelley Blue Book. Good to see you, Rebecca. Thanks for joining us tonight.
Thanks for having me on.
What do you think of this latest development with GM and Honda? I mean, we already have some self-driving features on cars. You know, the emergency braking, the developments that keep you in your lane and so forth. But this takes it really quite a bit further down the road, doesn't it, this development?
It takes it very, very far down the road, no pun intended. It's really looking at what the Society of Automotive Engineers, or SAE, calls level 5. And what that means is you will have this vehicle that doesn't have a steering wheel and doesn't have pedals or anything. It's really a pod that you just get in and it brings you to your destination. This is quite a long way off in widespread use, but it's exciting to see this kind of collaboration between Honda and General Motors.
I was really fascinated by how many different levels you told us there actually were. So if that's level 5, where are we now? As Bill mentioned, we have like the lane change issue and things like that, but
right.
Where does that put us?
So what you'll find, Sue, is that most cars on the road today are level 0 or 1, which means that the level 0 are really the older cars that don't even have cruise control. Mm-hmm. Level 1 is things like cruise control, types of braking systems and such. Level 2 is where we're starting to get more and more new cars. That's where you'll have lane departure warning. You'll actually have, if you, like in the Honda Accord, your hands are on the steering wheel, and if you start drifting, the car will actually move back for you or actually take the curve for you. It's a very unsettling feeling, but they will. And you'll also, of course, have self-parking cars. So we're starting to get more and more what we call level 2.
I know you're not a stock picker, and we didn't bring you here to pick stocks for people, but what are the companies that are sort of becoming the leaders in not only the cars themselves, but the technology that'll go into those cars that you can think of?
Right. Well, this is interesting because it wouldn't necessarily be a traditional car company that's leading this charge. Google or Alphabet's division called Waymo, which is headed by John Krafcik, who used to be the president of Hyundai North America, he is definitely leading the charge. Waymo is well ahead, especially in this pod scenario situation. But also, a couple years ago, Ford Motor Company invested $1 billion in Argo AI, which is really designed to get the artificial intelligence that these vehicles require. So it's coming from all different sources, which is why we're seeing some strange bedfellows like Honda and General Motors.
Very good. Rebecca Lindland with Kelley Blue Book. It's fascinating technology coming our way.
Really
Thanks for joining us tonight.
Thank you.
Margins come under pressure at Acuity Brands. That's where we begin tonight's market focus. The lighting manufacturer topped both quarterly profit and sales estimates, but said higher costs across the board hurt its margins. The company pointed to wage inflation, the impact from tariffs, and rising freight rates. The shares plunged 13% to $135.01. The mining company Peabody Energy has reportedly engaged in talks to buy Colombia-based Drummond International for as much as $4.5 billion. The Wall Street Journal says a potential transaction would involve Peabody taking an 80% stake in the coal exporter. Shares of Peabody Energy rose a fraction to $36.05. Higher home prices helped Lennar top Wall Street's earnings expectations. The home builder, however, painted to a duller picture for the current quarter. It cut its orders and deliveries forecast, citing the impact from Hurricane Florence and also weaker industry conditions. The shares were off 1% to 46.24.
Elsewhere, Upwork, that's an online marketplace that connects freelancers with clients. They began the first day of trading today on the NASDAQ. The company priced its IPO at $15 a share. That was above the expected range. Upwork executives candidly admit that going public was not just to raise money, but also to get more eyes on the business. The company said a big change in the workforce is helping its business model.
We think the market is ready for us, and we're ready for the market. We've been preparing for this for many, many years. And there's a big shift happening in the workforce today. The baby boomers are retiring. They were much less likely to be freelancers. The millennials are now the largest generation in the workforce. Almost half of millennials do some amount of freelancing today. And for them, what we do makes a ton of sense.
Well, it was a very successful debut. The stock up 40% on first day of trade at $21.18. Then after the bell tonight, specialty software firm Cloudera said it planned to merge with rival Hortonworks. That's an all-stock transaction worth just over $5 billion. Under this deal, Cloudera shareholders will own about 60% of the combined company, and Cloudera's CEO will serve as chief executive. Shares of Cloudera were higher in after hours, into the regular day up 1% at $17.08. Hortonworks shares were also initially higher in the extended session. They finished the regular session up nearly 2% at $21.88. Also after the bell tonight, Barnes & Noble said it is launching a strategic review. The bookstore chain said there are several parties interested in buying the business, including company founder and chairman Leonard Riggio. Shares were initially higher in the after-hours session, but they did finish the regular day down more than 1% at $5.46.
Coming up, keeping your online accounts safe so hackers don't stand a chance. North Korea may have stolen hundreds of millions of dollars by hacking banks. According to the security firm FireEye, the country has been infiltrating the computer systems of financial companies around the world since 2014. The attacks are described as highly sophisticated and have spanned 11 countries. FireEye says the group is still active and it poses a global threat.
By now, you probably have logged into your email or your social media or online bank account, and you've been prompted to create a second step to verify your identity. It's called two-factor authentication, and it's an extra layer of security that more and more companies are using to protect customer accounts. But it turns out hackers have already figured out a way to bypass that feature. Andrea Day explains.
Username, password, and now for extra security, two-factor authentication. Typically a special code sent to your smartphone. Enter it in and you're good to go, right?
Just by enabling two-factor authentication, you can't relax.
Meet Kevin Mitnick, once one of the FBI's most wanted hackers. He's now the chief hacking officer at cybersecurity firm KnowBe4.
Even though you're using two-factor authentication, a smart attacker could get access to your account.
It could open up your personal accounts or business files to criminals. And here's the scary part.
The tool to actually pull these attacks off has been made public. So any 13-year-old could download the tool and actually carry out these attacks.
KnowBe4's CEO, Stu Showerman.
It's happening as we speak.
He says the attack banks on social engineering. That's where hackers take advantage of human behavior to get you to do something, like click on a link.
Social engineering, if you do it right, can be used to get into almost anything.
And in this case, even your two-factor authentication won't keep them out. Here's how it works. Mitnick says the bad guys start by sending you a phony email that looks like the real deal. It's called phishing. In this demo, the fake email is from LinkedIn, saying a fan wants to connect. He clicks the link and is directed to the real LinkedIn page.
Now, LinkedIn basically brought up a message that I have to enter my two-factor code.
The code is sent to his device.
Now I got the message.
He enters the code.
And now I'm logged in.
But now the bad guys can log in too. Here's how. Before he was directed to LinkedIn, it secretly went through the hacker's server, where it left what's called a cookie. That's a bunch of info about Mitnick, like his username and password, and all hackers need to get in.
And now when I hit refresh, I'm going to be magically logged into the victim's account without needing a password, their username, or even their two-factor code.
His advice? Learn how to spot those phony emails and never click on a link unless you're 100% sure.
It's not LinkedIn that's vulnerable, it's the actual user. It's a security flaw with the human.
Take a close look at our demo. The email came from a fake domain, not LinkedIn, but llnked.com.
Which people initially might not even realize.
LinkedIn tells us, quote, "We take these types of reports very seriously and have a number of technical measures in place to protect our members. When we detect this type of activity, we work to quickly remove it and prevent future reoccurrences. We strongly encourage members to report any messages or postings they believe are scams." Companies like Google and others now have tools to try and prevent it. It's called a security key, and here's how it works. Director of Product Management, Mark Risher.
The security key stores its own password and requires the site to prove that it's legitimate before releasing that password and getting you signed in.
And while they've made strides, he says, there are still open areas.
It's not ubiquitous by a long shot, but we're encouraged to see more and more sites, more and more apps, and also more and more hardware manufacturers come online and make these products.
And the solutions may be one step closer, but the pros say that you still need to play a role and pay close attention to everything you enter, even with that special code. For a Nightly Business Report, I'm Andrea Day.
Finally tonight, Forbes is out with its annual list of the 400 richest Americans, and for the first time since 1994, there's a new number one. Amazon's Jeff Bezos now tops the list with a net worth of roughly $160 billion, about double what it was just a year ago. Bill Gates loses the crown. He's now at number 2, worth $97 billion. Rounding out the top 3 is Warren Buffett at $88 billion. And the minimum net worth to join this very exclusive club hit an all-time high of $2.1 billion. Not bad.
How nice for them.
How nice. That'll do it for us tonight. I'm Sue Herrera. Thanks for joining us.
I'm Bill Griffith. Have a great evening, everybody. We'll see you tomorrow.